All right, I'm going to give you guys a quick introduction to DeFi and yield farming, decentralized finance, also known as DeFi, and I'm sure you've heard of DeFi if you're involved in the cryptocurrency or NFT space. DeFi is going to go ahead and be the space to where you can send currency without a middleman involved. So if you decide to send $1 billion from one person to the next, say you're in the US and they're in China, okay, you can send it with cryptocurrency with no delay. If you're using a wire transfer system or a bank system, they can approve whether or not they want that transaction to go through. And if they think it's fraud or too large of a transaction, they can definitely decline it. Okay. And DeFi definitely moves away from the traditional banks to blockchain-based protocols. And yield farming is a key strategy within DeFi that allows users to earn rewards by providing liquidity to these protocols. And DeFi eliminates intermediaries using smart contracts on blockchains like Ethereum. So smart contracts are going to be the autonomous processes used in order for contracts to automatically process without an approval yes or no process. And yield farming emerged in 2020 with protocols like Compound, offering high APYs to attract liquidity. If you don't know what APYs is, it stands for annual percentage yields. So that means that you're trying to make money year after year by just holding it in one place. So let's say, for instance, you make $100,000, okay, and you put $50,000 into a bank account, right? You let it sit there for a year, okay? Depending on your APY percentage, let's say it's a 0.5 APY percentage, 0.5, okay? The next year, that $50,000 might turn into 50,500, okay? So then you profited $500 just by holding your money in there, depending on the APY percentage, okay? And in DeFi, yield farming APIs can range from 5% to over 100%, but risk like volatility. So it could be a good passive investment opportunity in order to potentially gain some income. So let's keep jumping into it. Let's keep learning about it. And don't forget that everything that you do trading wise can involve risk. So make sure you guys stand prayerful to God, be humble, and don't lose yourself. Don't lose your sanity. Even if you take a risk and it doesn't go well, you're going to be straight, run it back up again, come back harder, learn from your mistakes and run it back again. And what is yield farming in the first place? Yield farming is known as liquidity mining. Okay, so that's pretty much money mining. And it involves lending or staking cryptocurrencies, assets in DeFi protocols, such as Ethereum, for example. Okay, because it's going to involve staking. And staking is going to involve cryptocurrencies like Ethereum, for example, created by smart contracts. And it's going to go ahead and be staked instead of mined with POWs or power like Bitcoin is. Okay. So it doesn't do that in order to earn rewards, okay? And it involves lending or staking instead of POWs. And typically they come in the form of additional tokens. Users provide liquidity to decentralized exchanges, also known as DEXs. Okay, so if you ever see the term DEXs, stands for decentralized exchanges or lending platforms, and receive governance tokens or interest as compensation. Let's talk about the core mechanisms of yield farming in the first place. They're deposit tokens into a liquidity pool, and you can earn fees from trades plus reward tokens. Okay, so once again, you can earn fees from trades plus reward tokens. Okay, and compounding. Farmers often reinvest rewards to maximize yields. So when you make some money, put it right back into the market, okay, to maximize yields, creating exponential growth potential and always having wealth being generated for you. And platforms. Popular in 2025 include Uniswap, Aave, and newer trends like Solana-based protocols. And note, yields are not guaranteed and can fluctuate based on market conditions. And in essence, yield farming turns idle crypto holdings into productive assets. And similar to farming crops, where you plant seeds, also known as liquidity, and harvest yields rewards. And history of yield farming. Yield farming burst onto the scene during the DeFi summer of 2020. Fueled by high token rewards and low interest rates in traditional finance, it has evolved significantly by 2025, with more sustainable models emerging. So as of 2020, Compound introduces comp token rewards, sparking the yield farming boom, and that's when people really started doing it. And as of 2021 and 2022, explosion on Ethereum came into play, and people really started heavily trading it. Then multi-chain expansion to Binance Smart Chain and Polygon came out for lower fees, as well as Coinbase and stuff like that. So big brokers started implementing their own networks in order for people to trade and buy the cryptocurrencies. And in 2023, 2024, the focus on risk mitigation, post-tax like at the Ronin Bridge, leading to insured farming options. So this is bringing regulation to the crypto options. So once you guys start seeing insured stuff coming out, regulated laws, government bodies being involved, okay, that's how you know cryptocurrency is going to be heading into a positive space, inshallah. Why? Because it's going to be regulated, and that means it's going to be safe, no scams, and there's going to be laws protecting me and you. So anyone who wants to invest, there's going to be certain laws preventing a lot of things and preventing brokers from just taking your money. And there's going to be confirmations within every transaction too. Okay, so things can also be traced. And it gives you integration with real world assets as of 2025, also known as RWAs, and new AI optimized strategies for better profitability. So some people like to trade with AI bots. I don't recommend that. Recommend you guys do your research, your own trading, but as certain things do progress, there's going to be different programs coming out over the future. And AI may not just be used just to plot out trades. You know, it might be used to create certain programs like watchlists or stuff like that, and include it on apps and stuff. So also a beautiful time. Alhamdulillah. So in 2020, for example, SushiSwap forked Uniswap and offered higher yields to suck liquidity away, demonstrating the competitive nature of yield farming. So they offered higher yields. They offered more money, APY, per year. So let's say, for example, Uniswap offered 6%. Okay, SushiSwap came out, and let's say, for example, they dropped 30% APY. Everyone's like, whoa, 30% return on my money per year. Let me go ahead and get in that. Okay, and that's going to go ahead and demonstrate the competitive nature of yield farming and the different tokens. So we'll talk about how it works. Yield farming operates through smart contracts that automate reward distribution. So smart contracts is once again the autonomous process that controls the whole cryptocurrency flow. Here's a detailed breakdown. And step 1, choose a breakdown and choose a protocol. Select a DEX like Uniswap or a lending platform like Aave, for example, and provide liquidity. Deposit equals value of 2 tokens, for example, Ethereum and USDC, into a pool. Then you can receive LP tokens. Get liquidity provider tokens representing your share. And stake form. Stake LP tokens. Stake them in a farming contract to earn reward tokens. And step 5, harvest and compound. Claim rewards and reinvest for higher APY. And this process can be automated with tools like Yearn.finance in 2025, which optimizes yields across protocols. So once again, AI is being used in order to automate certain things within the trading space and not just plot out trades, for example. But some key components of yield farming. Let's understand the building blocks, and they're crucial for successful farming. So liquidity pools. So shared pots of tokens that facilitate trades on the DEXs, and LP tokens. LP tokens are proof of your contribution to the pool, and they're used for staking. Let's talk about reward tokens. Reward tokens are governance or utility tokens distributed to incentivize liquidity. And APY stands for annual percentage yield or rate. APY or APR, very similar. Okay. Even if you just see that on your banks or something like that, that's what it stands for. Annual yield percentage or annual yield rate. And it measures potential returns, often inflated by token emissions. And automated market makers, AMS, algorithms like constant product formula that determine the prices. Okay, once again, AI is also assisting with how the flow of the market is going to be changing. Okay, so in Uniswap v3, you provide liquidity and concentrated ranges for higher efficiency, potentially boosting the annual percentage yield from 10 to 50% on volatile pairs. So yes, there's a potential that it could not work out, but if you can get 50% returns on your money, then that's something that people are willing to give a big opportunity to and try. So some strategies for yield farming. To maximize profits, farmers employ various strategies, adapting to market conditions in the current years. So make sure you have a basic strategy. Single pool farming for stablecoins to minimize risk. And you can have layered farming. Stake LP tokens in multiple protocols for compounded rewards. Okay. And flash loan farming. That's also going to be a play too. It's where you use borrowed funds for short-term, high-yield opportunities. Be careful whenever you're using margin, okay, or leverage, or any type of borrowed funds. Okay, be very, very careful. Make sure you guys are doing your research, have a solid plan strategy, and make sure you have something to maximize your risk. And risk averse. It's where you farm on assured platforms like Nexus Mutual to cover impermanent loss. and AI optimized. You can use bots in 2025 to auto switch pools based on real-time APY. And advanced farmers monitor the TVL, token emissions, and whale movements for edge. Okay, so let's talk about what TVL is. Okay, so TVL stands for total value locked. That's a crucial metric in the cryptocurrency world, and it reflects the total US dollar asset staked on a blockchain or decentralized application, also known as the DApp. Okay, and whale movements as well too. So what a whale is pretty much someone with just a whole bunch of money who's making one big giant trade or who's moving the market. Okay, just someone who has a big share or percentage of whatever token, stock, or whatever. That's what a whale is. Okay, so if you see someone put like a $5 million on a cryptocurrency play or something like that, for instance, and it's not even that popular, they would be a whale. So whoever owns the large majority would be a whale. So some risk involved in yield farming. While lucrative, yield farming carries significant risks that can wipe out capital. And permanent loss. Loss from price divergence in liquidity pools, potentially exceeding rewards. Let's talk about smart contract vulnerabilities. Hacks like the 2022 Nomad Bridge example exploited to $190 million in losses. So as time goes over, security is increasing. Laws are getting passed, so things are going to be more regulated. So a lot of things are coming into infrastructure in order to prevent big exploits and big losses from happening. Let's talk about market volatility. Volatility is how fast and quickly the market's moving. Okay, that's pretty much what volatility means when you see that in the trading space. Tokens prices can crash quickly, okay, devaluing your rewards, aka, for example, a Luna collapsed, okay, where people think it's going to be the best play of all time. And then once a continuous amount of people start selling or a whale sells, people might follow along, thus crashing. Okay, once a large percentage of the holders start selling, a lot of people might follow along, devaluing the rewards and devaluing the token, thus making price fall down. And high gas fees. Okay, gas equals fees. Okay, you ever heard of gas in the cryptocurrency space? Pretty much just mean fees. And there are sometimes high gas fees on Ethereum, and fees can eat into your profit. So if you made $500, you know what I'm saying, you don't want your fees to be $70. You know, this way you're only getting $430. You want your bread. You want a lot of your bread. But sometimes high gas fees can really eat into your bread. And they're mitigated by L2s like optimism, but we're still going to be careful. God, let us hop on the charts and make some bread by clicking buttons and holding. So we're cool. And sometimes there can be some regulatory risk. And in 2025, increasing scrutiny from SEC and DeFi fields. Okay, but stuff is trying. Certain laws are still working on getting passed, and the government is still just structuring out how they want cryptocurrency to legally be applied. So for example, if you provide 1,000 Ethereum and 1,000 USDC and Ethereum price doubles, you might face a 5 to 25% impermanent loss compared to the holding. Okay. So profitability analysis. Is yield farming profitable in the first place? Let me know if you guys are profiting in the comments down below. And it depends on your strategy, timing, and risk tolerance. In 2025, the average APIs are 5 to 20%, down from 2020's highs, but still beat traditional savings accounts that offer like 1 to 3% at most, honestly. A lot of the times on most standard bank accounts, at least in America, from what I've seen. In pros, they can offer some potential high returns on your money. Once again, 5 to 20% added to your yearly money, okay, that could stack up over time, especially if it's a savings stash that you guys don't touch. If you're just in stack mode, you're staying down, putting the bread away, letting it make itself, okay, you're really going to be able to make some profitable plays. So it can be huge for building passive income, letting your money make its money while you grow, grind, and get some more money, inshallah. So that's ultimate stack mode. And there's also community governance perks too. So the more percentage that you own or have, there's going to be a lot of community benefits and a lot of community stuff just in the cryptocurrency space that can be pretty cool if you're interested. Let's talk about the cons. Not everything's peaches and creams and roses. So sometimes there can be high risk, and high risk require constant monitoring. And there's going to be tax complexities on the rewards sometimes, depending on how much you withdraw when you get paid, and depending if there's long-term tax benefits or not. Okay. And that's if you hold the trade for over 1 year. Okay. factors. The bull markets boost profitability and bear markets reduce it. Okay, so just like traditional stock markets, it works the same for the most part. And real data. As of 2025, stablecoin farms yield 4 to 8%, and volatile pairs are 5 to 15% APY. Okay, so stablecoins, you can still make some good bread. It's still a higher APY, still a way higher annual yield percentage than a lot of bank accounts. Okay, 4 to 8% is still extremely strong. Okay, and it's also going to be a consistent way to make your bread. Okay, it's not about making bread now. It's about making your bread and make bread over the years. Okay, get rich slow and it'll happen quickly, inshallah. Okay, keep praying, keep grinding, keep staying down, keep stacking up. Okay, stay down. And volatile pairs like 15 to 50% can give you a good return too. But if they last a long time, it's going to be the good question. Okay, sometimes they can involve big crashes. So just be careful. And I'd advise you guys invest in something stable. Whether you're buying stocks, cryptocurrency, or whatever, something stable is always going to be where it's at. And net profitability. Okay, the reward plus fees. Okay, minus gas plus impermanent loss plus opportunity cost. Okay. So real world examples and case studies. Let's examine practical cases to illustrate yield farming in action. So case 1, AV lending. Deposit USDC and earn 5% APY plus AV tokens. Okay, so double benefits. Okay. And case number 2, pancake swap on BSC. You can farm cake on BNB, BUSD, LP, yielding 20% APY as of 2025. And case number 3, Yearn.finance vaults. Auto compounding strategies averaging 10 to 15% returns. Once again, some AI trading coming into play and lots of new strategies and companies implementing new ways of success or failure, inshallah. So success stories. Early comp farmers. In 2020, early compound farmers earned thousands in comp tokens, which peaked at 900 during its peak. So that let people turn $10,000 of investments, for example, into millions of dollars. Okay. And some failure stories, like I said. Okay. So it's whatever God wills. Okay. It's not everything's always going to be peaches and cream. So in 2021, a bank run cost tightened to drop to 0, wiping out billions in total value and farmer funds. Okay. So just sending people's bread straight to a billion. Okay. Straight to oblivion. Okay. Straight down. Okay. So careful what you're investing in. Make sure you guys are investing in something safe, consistent, and strong that has some future value. So let's talk about yield farming versus staking versus RWAs. So I'm going to compare yield farming to alternatives for a balanced view. So yield farming versus staking. Staking is simpler and lower risk. So for example, ETH is staking at 4%, but there's lower rewards than farming 10 to 30%. So yield farming versus RWAs, also known as real world assets, like tokenized bonds that offer stable 5 to 7% yields with less crypto volatility. Okay, so there's more consistent bread over time to just go ahead and invest in. And when to choose farming. For high risk tolerance and active management. Hybrid approaches like farming RWAs combine stability and high yields, so that could be a good option too. So determine what's going to be best for your bank account, your pockets, and do what you do. Do what God has planned for you. And I'm just giving you guys all the education so you can go take this and figure out what you want to invest and trade in. So tools and best practices for yield farming. To succeed, you got to use the right tools and follow the best practices. So you can go ahead and use certain wallets like your MetaMask or Wallet Connect for secure interactions, keeping track of everything, all your transactions, and keeping track of your percentage gains, etc. And analytics, DeFi, Llama, or Zapper, you can go ahead and track your annual percentage yields and your TVL, okay? Your total value locked. Okay, so TVL once again stands for total value locked. And security, you can use hardware wallets, audit protocols to avoid rug pulls, okay? So use a hardware wallet, okay? Because you're not gonna be feeding to pull your bread out and go invest into something else quickly, okay? And avoid rug pulls, okay? Avoid Instagram meme coins, avoid Twitter meme coins, okay? Avoid anything that you just see and shiny eye syndrome. do your research, do detailed research on it. See if there's any other big whales, okay, investing into it. Okay, check out the TA, the technical analysis. Okay, check out the chart. See how it's looking. Is it at a low? Does it have upside? Okay, do your analytical research. Okay, before you hop into any type of trade, don't just take anyone else's word and take a loss for no reason. And the future of yield farming, or even take a win for no reason, because then you're not going to know why you won. You're not going to understand the structure. And say, for instance, God forbid that person were to stop posting or whatever, how are you going to make bread for yourself? So get self-sufficient. And as DeFi matures, yield farming is shifting towards sustainability and integration. And by 2030, as a prediction, DeFi can manage 1 trillion with farming and corporations, including NFTs and AI. Okay, both very, very two strong sectors within the future that we've seen in the last couple of years as of this recording in 2025. So if you're watching this in the future, let me know how progressed AI is. I'm here. And cross-chain. Bridges like the wormhole enable multi-chain farming. And there's also sustainable models. Move from inflationary tokens to profit sharing. And regulatory clarity in 2025, which means laws being passed and stuff like that, could boost adoption, making it even more profitable for compliant users, people who are just trying to be law-abiding citizens and just invest. In conclusion, is yield farming really profitable in the first place? Yes, all forms of trading can be profitable. Okay, if God puts a form of trading in your face, okay, or in your brain, if you do that, some people are millionaires off crypto. Some people are millionaires off forex. Some people are millionaires off options. Some people are more millions off futures. Okay, different sectors you could trade. Trade what you want to do. Okay, and yield farming can definitely be profitable in any year. Okay, and it offers returns far above traditional finance, but it's not for everyone due to high risk. And success requires education, strategy, caution, and most importantly, prayer to God. Okay, humble yourself. Even when you touch that big bag, okay, just like the story of Benjamin, don't go blow it. Okay, don't go blowing that big bag. Don't go think you're mighty. Don't go think you're the best trader of all time. Be thankful, reinvest, pay your taxes, come back stronger. Okay, never think you're on top of the world. Just keep going, keep staying hungry. And you'll be profitable if you manage your risk. Okay, don't be putting all your bread into it, expecting to get some yield returns. No, pay your bills, take care of yourself, and then come back and diversify and stay informed as well too. And if you're always risk averse or expected guaranteed returns, then I don't know if you're going to be ready for trading. Okay, you can't be ready to always think that you're going to win. Okay, and you can't be expecting that you're never going to lose. Okay, you have to be okay with losing, and you have to be okay with putting some risk down on the table. Okay, do your research. Okay, paper trade, and never invest with more than you can infuse. Okay, or lose. So pay your rent, go get some groceries, do what you need to do, and then go ahead and invest and stay down. And you should be investing more than you're spending to the most part. Okay, stay down. All right, love you guys so much. Stay prayed up to God. Keep grinding. Catch you in the next one. Peace.